Stocks, real estate, bonds, crypto, art, used cars, Rolex watches. For the past decade, it seems like the price of everything has gone up. We have been living in a world of effortless wealth, a world where everyone is a genius investor, a world where the line only goes up. We have been living in the everything bubble, and it is about to pop. What is the everything bubble? It is the largest and most widespread asset bubble in human history. It is the direct result of the most reckless monetary experiment in human history. A decade of zero interest rates and trillions of dollars of money printing by the world's central banks. They told us they were stimulating the economy. They told us they were fighting deflation. But what they were really doing was creating a global casino. A casino where everyone was a winner, as long as the music was playing. But the music has stopped. The Federal Reserve has been forced to raise interest rates to fight the inflation that they themselves created. And in doing so, they have taken a pin to the everything bubble. And we are now beginning to hear the hiss of the air leaking out. This is not a normal market cycle. This is not a healthy correction. This is the end of a speculative mania that has distorted our economy, our society, and our very perception of reality. And the crash will not be confined to one sector, like the dot-com bust of 2000 or the housing bust of 2008. It will be everywhere, all at once. Look at the stock market. The tech darlings of the pandemic era have already crashed back to earth. The meme stocks have been wiped out. The SPACs have been exposed as a fraud. But the broader market is still hanging on, sustained by a handful of mega-cap stocks. This is the final deceptive stage of a bubble, the stage where the generals are the last to fall. Look at the bond market. For 40 years, we have been in a bull market for bonds. Interest rates have been in a secular decline, but that era is over. We are now in a rising interest rate environment, and that means that the price of existing bonds is falling. The so-called safe part of your portfolio is no longer safe. In fact, it is the most dangerous part. Look at the real estate market. The pandemic saw a frenzy of buying, fueled by low mortgage rates and a flight from the cities. But now, with mortgage rates at a 20-year high, the market has frozen. Buyers cannot afford to buy. Sellers do not want to sell and give up their low-rate mortgages. The entire market is seized up, waiting for the inevitable decline. And look at the crypto market, the Wild West of the everything bubble. A market that was built on pure speculation, on hype, on the promise of getting rich quick. The crash has already been brutal, but the final washout is yet to come. The tide is going out, and we are about to see who has been swimming naked. This is not a coincidence. These are not separate and unrelated events. They are all symptoms of the same disease. The disease of easy money. The disease of central planning. The disease of a financial system that has become detached from reality. And the consequences of this bubble bursting will be catastrophic. The wealth that people thought they had will evaporate. The retirement plans that were based on unrealistic assumptions will be shattered. The companies that were built on cheap credit will go bankrupt. The governments that were funded by a rising tax base will face a fiscal crisis. This will not be a recession. It will be a depression. A depression that will be deeper and more painful than the 1930s, because the bubble is bigger and the debt is larger, and the central banks will be powerless to stop it. They have already used all their ammunition. They cannot cut interest rates because they are still fighting inflation. They cannot print more money because that would just add fuel to the inflationary fire. They are trapped. They have created a monster that they can no longer control. This is a terrifying prospect, but it is also a necessary one. The everything bubble has been a cancer on our economy and our society. It has rewarded speculation over production. It has widened the gap between the rich and the poor. It has created a false sense of prosperity. The popping of this bubble will be a painful but necessary cleansing, a return to reality, a return to a world where value is based on fundamentals, not on fantasy. So what can you do? You can prepare, you can get out of debt, you can reduce your exposure to risky assets, you can own real things, things that have intrinsic value, things that cannot be printed out of thin air, gold, silver, productive land, your own skills. And most importantly, you can prepare your mind. You can accept the reality of what is coming. You can reject the narrative of denial and hopium that the mainstream media will try to sell you. You can understand that this is not the end of the world, but the end of an era, the end of a failed experiment, and the beginning of something new, something more honest, something more sustainable, something more real. Let's be clear about the psychology of a bubble. A bubble is a form of mass delusion. It is a social phenomenon, not a financial one. It is driven by greed, by envy, by the fear of missing out. It is the belief that you can get something for nothing, that the laws of economics have been suspended, that this time it's different. It is never different. The pattern is always the same. It begins with a new and exciting story, a new technology, a new market, a new paradigm. The smart money gets in early. The price starts to rise. The media starts to cover the story. The public starts to get interested. The fear of missing out kicks in. Your neighbor, your brother-in-law, your Uber driver, they are all getting rich, and you are not. So you buy in. You mortgage your house. You take out a loan. You go all in. And for a while it works. The price keeps going up. You feel like a genius. You feel like you have discovered the secret to effortless wealth. But you have not discovered a secret. You have become a victim. You are the sucker at the poker table. You are the one who is providing the exit liquidity for the smart money that got in early. And when the music stops, you will be the one left without a chair. This is the cruel and inevitable logic of a bubble. It is a transfer of wealth from the foolish to the prudent, from the latecomers to the early adopters, from the public to the insiders. And the everything bubble is the greatest of them all, because it is not just one bubble in one asset class. It is a bubble in all asset classes. It is a bubble in the very idea of risk itself. The central banks, with their zero interest rates and their quantitative easing, have taught investors that there is no risk, that the Fed will always be there to bail them out, that the market can only go up. This is the most dangerous belief in all of finance, and it is a belief that is about to be shattered. When the everything bubble pops, it will not just be a financial crisis. It will be a crisis of faith, a crisis of confidence in the institutions that are supposed to be the bedrock of our society. The Federal Reserve, the government, the media, they have all been complicit in creating this bubble. They have all been lying to you. And when the bubble pops, their credibility will pop with it. This will lead to a political and social crisis that will be far more dangerous than the financial one. It will lead to anger, to resentment, to a search for scapegoats. It will lead to the rise of extremism, of populism, of authoritarianism. This is the historical pattern. Financial crises lead to political crises, and political crises can lead to war. This is not a prediction, it is a warning based on the lessons of history. A warning that is being ignored by our leaders, a warning that you must heed if you want to protect yourself and your family. The everything bubble is a monument to our own greed and folly. It is a testament to the destructive power of easy money. It is a house of cards that is about to be blown down by the winds of reality. The only question is whether you will be inside the house when it collapses, or whether you will be standing outside, on the solid ground of real assets and sound money. Let's get specific about the mechanisms of the pop. It won't be a single event, but a cascade of failures. It starts with the weakest links in the chain, the zombie companies that have only been able to survive by taking on more and more cheap debt. As interest rates rise, they will be unable to service that debt. They will default. This will trigger losses for the banks and the bondholders who lent them the money. Then the contagion will spread to the housing market. The frenzy of the past few years was driven by historically low mortgage rates. Now that rates have doubled, the market is frozen. But it will not stay frozen forever. Eventually, people will be forced to sell because they lose their job, because they get divorced, because they have to move, and when they sell, they will find that there are no buyers at the old inflated prices. Prices will have to come down, and as they come down, it will trigger a wave of foreclosures. People will be underwater on their mortgages, owing more than their house is worth. This will create a feedback loop of falling prices and forced selling, just like in 2008, but on a much larger scale. And then the final act, the sovereign debt crisis. As the economy slows and tax revenues fall, governments will find it harder and harder to finance their massive deficits. They will have to issue more and more debt at higher and higher interest rates. At some point, the market will say no more. The demand for government bonds will collapse, and governments will be faced with a choice: default on their debt or print money to pay it off. they will choose to print. And that will be the beginning of the end for the currency. It will be the beginning of hyperinflation. This is the end game. A simultaneous crash in the stock market, the bond market, the real estate market, and the currency. A complete and total meltdown of the financial system. A greater depression. A crisis that will make the 1930s look like a walk in the park. And the people who will be hurt the most are the people who did everything right. The people who saved their money. The people who invested for the long term. The people who trusted the system. They will be the ones who are wiped out. While the insiders, the ones who created the bubble, will have already cashed out. They will have converted their paper wealth into real assets. They will have bought the land, the gold, the art. They will be the ones who ride out the storm in their fortified compounds, while the rest of us are left to fight over the scraps. This is not a movie, this is not a novel, this is the reality that we are facing. A reality that has been created by the choices of our leaders. A reality that we can no longer afford to ignore. The everything bubble is a test. It is a test of your intelligence, of your courage, of your will to survive. It is a test that will separate the prepared from the unprepared, the realists from the fantasists, the survivors from the victims. The choice of which group you will be in is yours, and it is a choice that you must make now, and it is a choice that you must make now, and it is a choice that you must make now.